Welcome back. Earlier today, we had a couple quarterly numbers that were released in regards to home ownership. The blue line here is a home ownership rate. Again, this is recorded on a quarterly basis. The red histogram bars represent the federal funds rates. Home ownership rate currently sits at around 66%. It's interesting to note is going back to 2009, that was after obviously the last financial recession, especially in regards to the housing market. Interest rates are very low, and the home ownership rates plummeted at first, but then, and that was obviously after the tailspin, the financial recession, but we can see that the home ownership rate skyrocketed, moving up to levels around 68%. And I know these are small changes, but it does mean quite a lot. Now, that spike really took place after the COVID crisis around 2020. And just to put this in perspective, the Federal Reserve kept interest rates at near zero for a very long time, from 2009 through 2015. They started to ratchet up interest rates ever so slightly as the economy really started to pick up steam. And if you recall, before the COVID crisis of 2019, interest rates had risen to around 2.5% roughly, and the home ownership rate at that point was only around 64, 65%. But what had happened was that with the massive influx of spending, of stimulus that occurred post COVID crash 2019, early 2020, that's when we saw the home ownership rate really spike. So if we think that the home ownership rate spiked as a result of quantitative easing one and two, and during the years of 2013, 14, 15, it pales in comparison to what we saw more recently. Now, here we see federal funds rate again in red. The rental vacancy rates, also expressed as a percentage, we can see absolutely plummeted during the post 2008 crisis. That's when a lot of people went out there and bought homes, taking advantage of low interest rates, and the economy really started to rebuild itself as interest rates began to rise 2017, 2018, and up until 2019. The rental vacancy rate really plummeted. Now, we had a spike up. I think that was obviously an anomaly in regards to the COVID crisis. But what's interesting to note is that we've come off the lows over here. And typically what we understand is that the rental vacancy rate, you know, it it acts a couple different ways. First of all, more of us that greater number of people that buy homes, obviously they're not going to rent as much, but then you could look at it from the other side. We might buy a second home and then rent that out as a secondary income. So there's an interesting correlation that takes place. But what we saw was the rental vacancy rates really spiked after the 2008 crisis, as more and more people really got involved in buying homes at that point. Here's the vacant housing units. This is expressed in terms of thousands. That's on the right hand side. So when we see 15,000, it's 15,000 times 1,000. And we can see as the Federal Reserve cut interest rates and kept interest rates near zero for a very long time, the vacant housing units, the amount of units out there that were vacant, continued to plummet. Now, obviously, as interest rates were kept near zero post-COVID crisis, and then all that stimulus came in, the vacant housing units really dropped precipitously as everyone really got back involved in the real estate market, taking advantage of low interest rates. That has come off its lows, but it has continued actually to move to the downside. Very interesting to see. And then finally over here, we see the red line is a rental vacancy rates. The blue line is a home ownership rate. This goes back to the year 2000. So in the year 2000, we saw both lines moving to the upside. The rental vacancy rate went up while the home ownership rate went up as well. Now, how does this work? Well, the stronger the economy was, the home ownership rate went up. Especially after 2001 recession, interest rates were brought back down. When interest rates go down, home ownership rate goes up. Both lines moved to the downside. The home ownership rate plummeted post 2008 crisis, as did the rental vacancy rate. Another way to look at it is that for all those individuals that lost their homes after the 2008 housing crisis, that created more renters, and there was less, basically, there was less homes out there available to rent. What's interesting to note is that the COVID crisis of 2020, the home ownership rate spiked, the rental vacancy rate dropped precipitously, which is opposite from what we saw in 2008. In 2008, we saw both lines go up and then afterwards go down. But the question is, why is a home ownership rate going up when the rental vacancy rate is going down? Maybe that's because there's less individuals that are buying second homes out there as opposed to what happened in 2008. Maybe the lending standards are not as loose as they were, um, after the 2008 housing crisis. Fast forward to present day, the home ownership rate is still, sticking right near highs. And there's something called the lock-in effect, where all those individuals that bought homes, uh, you know, during these post-COVID crisis years, 2020, 2021, taking advantage of all those low interest rates until the Fed obviously started raising rates. Those individuals don't want to sell, because if they turn around, sell their house, and then buy something else, now they're locking themselves into a higher interest rate. So these higher interest rates are not only dissuading new home buyers, but they're also dissuading those individuals that may want to sell. They want to hold on to the 30-year mortgage. Let's say you have a 30-year mortgage, you bought a house 10 years ago. You still have 20 years to go. Well, I don't want to roll that 20 years of extra mortgage into now 7% loan. Better to stay with my, 0%, or, very close to 0% loan. So it's called the lock-in effect. It's something that's very unusual, but it's a phenomenon that we're working with right now. And it's going to be very interesting to see how this works out. We have employment numbers later on this week as well, and a full economic calendar. We'll be sure to update you with any significant changes along the way. We hope this has been helpful. We look forward to seeing you back soon.